Hi, and welcome to Weiss Ratings Behind the Screens. I'm Senior Financial Analyst Gavin Magor, and today we're going to take a look at micro and nano stocks. We seem to spend a lot of time talking about the big companies, the Amazons of this world, and the Apples and Googles and such like. So today we're going to be looking at smaller companies. And of course we're going to add, the first thing are Weiss Ratings. So we're going to click on the rating, add that, and select the buy rated companies, because we're not interested at all in those that aren't recommended as a buy, although of course you can later change that. And first thing we're going to do is to select the market cap size, because that allows us to choose these micro and nano caps. From this drop down menu, just click on micro caps and they will appear. Then put your cursor back in the same area and you can then pick the nano caps. You can add as many as you like or delete them as you like. And of course then we're going to take a look at their closing price, because you may or may not want to pay the price that they're looking at. And if they're asking for several $1,000s of stock, then you're not going to want that. So let's click on closing price and select that. We're going to put that down as like a $10 minimum or maximum rather, because we don't want you to have to dig too far into your piggy bank for your money. This has got to be affordable. So we're looking at small companies that are affordable. And then we're going to add the dividend yield. We like dividend yields, and we have a favorite number of about 2.5%. So we're expecting our dividend yields to have a minimum return of 2.5%. This gives us an opportunity to narrow down the selections. You can change it again. As I said, it's not a rule, it's just that this is what we choose. And then we're going to add in here the price earnings to growth. And you get price earnings to growth from the valuation area. And when you scroll down, click on valuation, you see this, scroll down, price earnings to growth. And this is where you're dividing the growth rate of earnings to the stock value. So you've got price here against growth. And that gives you a good opportunity to select a company that has got a better value than one. We're not going to want a company that's growing too slowly. We're looking at the price to be really good value. So then we're going to add in here the regular pricing details. So we're going to look at price again, and we're going to scroll down here and we're going to select the returns. So we're going to look at the total returns, and we're going to select the 3 months, and we're going to select the 1 year and the 2 year. So scroll down here and just add these returns. And here comes the 1 year. Scroll down a little bit. And you see the difference between the 1 year and the year to date. We're talking about 12 months when you took at the 1 year total, not just from January through to whatever period you're looking at. And then we're going to add the 2 year. So let's scroll down here, add the 2 year, and that's that done. And we're going to look at price again for the 1 year total volume average, because we're looking for a stock that's going to be good value, but you do also need to be able to buy it and sell it. So we're looking here down at the bottom, volume average. This tells you the average number of the stocks that is traded over a period of time. We're going to select the 1 year, and we're just going to add that in. This gives you just an idea. We're not going to put any number in there, just gives you an idea of what we're looking at. So as you can see here, we've got the buy rated companies, micro nano caps, closing price of $10 or less, dividend yields at least 2.5%. We've got price earnings to growth of 1, and we're just looking at the returns here. We're not putting any numbers in there, and we're not putting any numbers into the volume average. So let's take a look and see how many companies we've got. And as you can see here, with the micro and the nano cap companies, there are only 6 that fit that criteria. Now, this isn't a problem. This is just simply gives you the choice to look at these individual companies closely. They may be great companies. They just in sorts of different industries. They're offering you different yields. I mean, you're raising here from 2.71 through to 11.8%. But that doesn't necessarily mean that that's the one that you want to buy. You might not want to buy any of them. You scroll across and you can see the average volume of sales. Here, this is the numbers of stocks that have been sold. Okay, the returns. Click on this. You can sort this low to high. 2-year return, negative 19.22%. However, there's another one here at 173.65%. It doesn't mean that you're necessarily going to buy those. What we're giving you the opportunity to do is to select those companies to take a deeper look at. When you take a deeper look at it, you can then decide whether or not you want to buy that stock. And really what we're trying to do is to give you control of your investing. We can help you reach those decisions to buy, sell, or hold a stock, a mutual fund, or an ETF. And I will say thanks for joining me, Gavin Magor, Senior Financial Analyst at Weiss Ratings, empowering you with investment confidence. Until next time, cheers.